Hi, hello and good day, everybody. Hey, Mike. Hi. Good morning. Good
Hi,
morning.
morning.
How's things going, Mike?
Good. Except it's very tired to sit at home. The
Ah,
lockdown.
okay,
Yeah.
okay. Yeah, I get it. I get it. Well, basically, that's what's happening now. So it's kind of ironic and an oxymoron to say that this is what they call the new norm, whereby I mean, norm is a norm, there's no such thing as a new norm and an old norm. Um, I guess life would never go back to normal anymore. Like years ago, we don't actually see people going around wearing masks and all those kind of things. But nowadays, if you don't wear a mask, well, you know what's going to happen to you. All right.
Yes.
Okay. So, guys, all of that aside, all right. So, today we're going to have a very informative session on discussing about stocks. Like we told you previously, we are going to have our series coming up. From time to time, and stick with us, and we promise you that you'll definitely gain a whole mountain full of knowledge. All right. And today, okay, we will be focusing on stocks. Okay. All right. Now, you may be thinking, for those of you who are not so familiar with the word stocks, um, in Malaysian and British context, stocks is the American counterpart of shares. So it actually means the same thing, all right? I mean, Americans, British, they just like to identify themselves differently, okay? But anyway, today we'll be going in on value growth stocks, all right? So here to enlighten us today is our founder, Mr. Mike Sim. Mike, can you tell us a bit more about value growth stocks? I mean, I believe the audience here are dying to know what it's all about.
Yeah. Okay. Value growth stock. Basically is a stock that is undervalued. When you go in, you buy it. Okay. It's more like a cheap sales. Okay, in the market. All right. Okay. So basically, there are many ways to determine what is undervalued stocks. All right. So the very common way to determine it is we call it a PE ratio. Okay, price of earning ratio. Okay, so price of earning ratio basically we're using the current stock price. Okay, divide by the earning. All right. Okay, so basically you will get a ratio. Okay, so basically in a broad market term, if let's say the PE is less than 20, we call it is undervalue. All right. So if it's between like 20 to 25, we call it a fair value. So anything more than 25, we call it overvalue. Okay. So basically, current stock market scenario here is okay. Value stock tend to be forgotten already. Okay, especially in the tech sector. All right. Okay. So a lot of people will look for the super growth stock. Okay, meaning that it's not a value stock anymore. All right. So in order to understand, okay, what is a value stock here, I think the best way is we look at one stock, which I personally hold it, and when time go by, I more and more like it is stocks. Okay. So basically, this stock is like you no need to monitor basically. Okay, and you no need to worry about whether this stock will crash or going nowhere or what. Okay. So based on my observation, this stock is the worst. In the worst time, it only pull back around 20 to 30%. Where most of the stock can pull back down to 50% or 60 or even 70% during the worst time. Okay, but again, the previous, slide, previous show, we already saying that when the market pull back, when you find a good stock, it's a good time to buy. Again, the market will not prove it wrong one in this type of scenario. When the market pull back, is a cheap sales, and you get the same quality of products. Okay,
Mike, just on
but
this one,
again,
Sorry, just
Yep.
on this one, just a quick question. Because a lot of people have asked me, okay, they also have, I mean, they are trying to understand the concept of stocks discount, stocks cheap sale, you know, okay. So some of them get it, some of them don't. So here's the thing, quite a number of people, you know, they try to get discounted stocks, all right. I mean, they go into stocks that are like, they categorize them as cheap, okay? Those penny stocks and those dog stocks at a couple of dollars. But the thing is, like, they don't really understand the PE term and all that. So um, they are like still in that kind of phase whereby is that a good stock or what? I mean, a lot of people tend to confuse um, cheap stocks with undervalues. So I think maybe you can help the people out there to differentiate what are cheap stocks, what are undervalued stocks, and what are stocks that are good to invest in, you know, that around that category.
All right. Okay, that's a very, very good question. Okay. So basically, before you pick a stock, you must look at the sector or the industry. All right. So normal sector, which actually a lot of people will think will have an experienced high growth. Okay, they have a very high PE or no PE at all, meaning that they only have a revenue. Okay, this is normally happen to the internet stock. Okay, currently is a EV stock. Okay, electric vehicle stock. Okay, and those are fast growing, which actually people perceive the sales will grow 10, 20, 30 times per annum. Okay, we're talking about 1,020, 2,000, 3,000. Okay, so this stock basically you can see that there's no PE, you know, because there's no E there. E is earning, remember. Okay, it's a net earning. They only have revenue. Okay, so make it very simple. If you do a business, okay, you are basically need a cost of running the business. Okay, so if there's no profit, okay, so basically if you actually are using your cash flow to sustain your business. All right, so again, you have to look at what actually the company have, whether got a free cash flow or not. Okay, if let's say they don't have free cash flow to sustain the business, that business will be quite dangerous. Okay, because as long as there's no cash to sustain the business, okay, they cannot grow, they cannot operate. Okay, so when this thing happen, it might actually cause the stock to crash, or maybe the business go down, or maybe go bankruptcy. Okay, this is happened to a lot of business which actually is not proven one. Okay, this is we call it a high growth stock. Okay, whereas today our topic is more on value stock. But value, when you look at value stock, most of the stock already reaching a blue chips level. Okay, so a lot of people say, okay, a penny stock which actually is 50 cents is very, very cheap. That is actually a face value. Okay, you are basically you are not value the stock based on the face value. It's the same thing. If I ask you to buy a car, okay, a second-hand car, okay, 10 years ago one, okay, the car is actually worth about 10,000 ringgit. And today, okay, I ask you buy a new car, okay, worth about 40,000 ringgit. Do you see that the 10 years car, older 10 years car is cheaper and better? Yeah, it is cheaper, but it is better or not? After you buy it, it is better or not? No, right? Okay, it's not better. Okay, even you buy it at a very cheap price, but can this car perform? Or you have to spend a lot of maintenance, or maybe you incur a lot of losses. All right, okay, from buying this car. It's same thing like stock. All right, when come in stock, when you think something is cheap, there's no revenue and no profit. Okay, the worst is no revenue at all. Okay, and no profit, only a concept. There's some stock in the market like that. They have a very good marketing strategy to promote the stock. Okay, however, you look into this sector, hey, this stock is cheap. It's only have 20 cents, 30 cents, you know. If we move up like 1 cent or 2 cents, I get about 10 to 20% return. So if you have the kind of mindset to investing, you are in a very dangerous zone. You maybe can use that kind of particular stock for trading, yes. Meaning that you buy 20 cents, if it go down 2 cents, you cut loss. If it go up 4 cents, you take profit. That one for trading possibility. Okay, but for investing, you want to hold it, you want to build your wealth. Okay, is very, very difficult. Very, very difficult. Okay, because it's not proven yet. Okay, however, if you look at the company with a huge revenue but no profit, yes, okay, and they have a free cash flow, okay, to sustain their business, that's good. Okay, at least you take some risk with them. but you know this company have $1 billion of revenue already. Okay, why they don't have profit yet? Because they expand their business. Okay, this is normally the American capitalists like to do it. Okay, before they turn to become a giant. This happened to be like in Google, Apple in the early year. Nowadays you can see Tesla also. Okay, so Tesla last year only turned to be a profitable company. Okay, so this company actually promised a huge revenue in the future. They already have a huge revenue, but a bigger revenue in the future. So if you buy in this company, at least your appreciation rate there is very, very high. Okay, if this stock really perform up to what they promised. Okay, but if they can't promise, you can see the stock fluctuate. Value stock, okay, is something the company have made a lot of profit. Okay, a lot of profit. Okay, so basically when they have profit, only you can see the PE. You can judge whether this is a good stock or not good stock. Okay, a lot of people have forgotten, okay, some company with a good PE. All right, okay, because they actually chasing for the growth stock. So today we're going to introduce you one good stock, which is value stock. Okay, which I think is value stock, which will be a value stock forever. All right. Yeah.
Interesting.
Yeah. Okay, so this is the value stock we're talking about. Okay, the value stock we're talking about today is Berkshire Hathaway. Okay, or Berkshire Hathaway. Okay, so basically your guys maybe may not heard about this company before. Okay, because I think it's very, very difficult to pronounce this company. Okay, however, when you mention about Warren Buffett, okay, I think everybody heard about it. Okay, so Warren Buffett, okay, basically is a totally a value investor. Okay, so his principle basically I respect a lot. Okay, he once said something I also respect a lot. Okay, he said if you look at money, you have the emotion, maybe you have emotions, you have problem emotions to control your money, you are not going to do well in investment, which I totally correct. Okay, because a lot of people see when one stock is going up, they will chase the stock. They actually have a FOMO feeling. Okay, so this guy, okay, basically it's very difficult for him to buy in one stock. The moment he buy in one stock, he have a lot of convictions to support it, which actually is on a value investing side. Okay, so of course, if you want to look into the way he actually try to value the company, okay, I would say it's very difficult for him to find one good company to invest now. Okay, especially current particular market scenario. All right. Okay, so basically this is why I actually like this company called Berkshire Hathaway.
Yeah, I believe that many years ago when I myself first started, okay, I didn't see the simplicity in it. It just tend to be a little bit abstract and all that. But as time went on, as I continually learned and did research to enhance my knowledge and all that, yes, things turned out to be pretty simple to understand. So, yeah, true enough, because the word Berkshire Hathaway is a little bit difficult to pronounce for most people. I mean, if you have read Robert Kiyosaki's book and all that, most likely you would come across or you'll be acquainted with the name of Warren Buffett, definitely. Okay. Even some people are familiar with the name Paul Tudor Jones and all that. Yes. However, the funny thing is, Mike, like when you come to Berkshire Hathaway, there's another Hathaway that I can think of. You want to make a guess? There's another Hathaway I can think of.
What is it?
It's a person.
It's a ladies, right?
Yes, that's right.
Yeah. I know.
Yeah.
I forget her name already.
Yeah, so basically it's a pretty okay, and it's a pretty famous actress. The name is Anne Hathaway. Yes, Academy Award winner, Oscar winner.
Yeah, I know.
But I don't think she's got any relation to do with Buffett or Berkshire, right?
Definitely no.
No, right. It's just what a coincidence. I mean, you share the name of the company of one of the richest men in the world. So it's like, wow, that's got to be something. Okay, all right. So I think I'm just trying to help you guys to remember this company easier. You know, if you know Anne Hathaway, you already know the word Hathaway, so you just add a Berkshire in front. Okay, trying to make it simple for you guys. All right. Okay.
Very good, very good.
Yeah.
Okay.
I mean, definitely. I mean, if I knew it from the point that I was born, okay, or if maybe my mom or dad knew this, you know, for me, or my grandparents knew it for me, this would definitely be the company whereby I put all my eggs in. Okay, I know that today, you know, people talk about don't put all your eggs in one basket, diversify and all that. But I'm just saying for the sake of saying, if I knew about Berkshire Hathaway back then, I'll put every egg, every durian, every mangosteen, every rambutan, I'll put all in. Okay, if you knew about its performance today. And having said that, this company still is performing today. All right, and I believe that Berkshire Hathaway still maintains its initial principles, its initial ethics of business, its business model, and all that hasn't changed much. All right. I mean, of course, they have acquired many other companies, and they have invested in many other solid companies. Okay, so that is basically part and parcel of the reason why they are growing from year to year, because the companies that they invested in, okay, for those of you who may know or may not know, okay, Apple is a pretty big chunk of their portfolio. So the automation here is this: when Apple increases in value, what does that translate to? It basically means that Berkshire Hathaway increases in value. That basically means that Warren Buffett's net worth pumps up, you know, balloons up more. Okay, all right, and yeah, Mike, maybe you can share with us what is actually the business model of Berkshire.
Okay. Yeah. Thanks, Peter. All right. Okay. A lot of people think that Berkshire Hathaway actually, or Warren Buffett actually is stock traders, or and very good stock traders, this and that. I need to clarify here. Okay. Sometimes actually Warren Buffett don't even buy a single stock in a year, or in a 2-3 years time. Okay. So he is more like a value long-term investor. All right. So he is basically invest in a business, like what we said earlier, a very solid business. Okay. And sometimes the business can be a very, very simple business. Very, very simple business. Okay. What he can do here is, you always say, the business must have an economy mode, a very solid business, which grow when the populations of the world grow. Okay. So one of the biggest, I think, business that he invested is Coca-Cola. Okay. So he using Berkshire Hathaway actually as a holding company to buy the share of Coca-Cola. All right. So basically, as you know that, okay, the dividend given by Coca-Cola every year to Warren Buffett is almost like, I think, about at least 500 millions. Meaning that every day actually Warren Buffett producing 2 to 3 million US dollar minimum for Berkshire Hathaway. So if you are a shareholder of this company, he is actually, and the management of Berkshire Hathaway actually is making about 2-3 million cash. Okay, to the company. Okay, so you just times 2 million to 365 days, how much you get? There is actually one company that he invested, which actually get the cover you. All right. Okay. So, well, you can ask whether this is a good company or not a good company. All right. Okay. So basically, this is why actually make me that when I study about Berkshire Hathaway again, you have to look at the business they are in. Okay, Berkshire Hathaway actually is a conglomerate. Okay, conglomerate meaning that actually they hold a lot of company share. Okay, and most of the company share they are holding more than 5 years one. Okay, more than 3 to 5 years or even forever. Okay, unless something very big happened to that industry, then they will trim down. Okay, it's just like, I mean, 4 or 5 years ago, they actually invested in airline. Okay, so the airline is doing very well that time. However, because of very unexpected, even Warren Buffett cannot expect this thing come on is COVID-19 or coronavirus strike. Okay, so the travel industry has been slumped. Okay, and during that period of time, actually, they make a decision to cut loss. Okay, this is like what we said earlier also. You exit based on the fundamental. Okay, because the fundamental for them, they're worried about this thing will prolong. Okay, so this industry may not grow as strong as like they projected. Okay, so they exit. Okay, or else they will hold it forever. Just like Coke, okay, and many others business. Okay, so to understand Berkshire Hathaway, first of all, okay, I would like to share a screen with you guys. Okay, so what is inside Berkshire Hathaway? Okay, so basically you want to find, okay, how actually Berkshire Hathaway, okay, on here, okay, you actually is very simple for you to look into why today it's very easy for you to do research in the US company. Plenty of informations. All right, so basically if you look at Berkshire Hathaway, they have two way of operate their business. One is through a wholly owned company, meaning that they own actually basically maybe more than 51% or 100%. Okay, so these are the company. All right, this is not really a latest data. Okay, so you may check the latest data actually in the SEC. Okay, SEC website, but I think overall 80% the company is still maintained there. All right, okay, so basically if you look at this company, the significant stake, meaning that in US, okay, if you own more than 5% in a company, you can consider as a significant stake already. For example, like Apple, okay, Coca-Cola, Wells Fargo, all these actually a company which actually Berkshire Hathaway own a significant stake on. And recently actually they own a lot actually pharmaceutical company also because of this virus thing. All right, so in another word, okay, just now I just mentioned Coca-Cola every day earn you about 2-3 billion, earn the company about 2-3 million per day on term of dividend. So you can see Coca-Cola is actually just a small portion of the overall company here. All right, and then you have NetJet. Okay, this is a fully wholly owned companies. Okay, and the cash machine actually for Warren Buffett. Okay, you think actually is a Coca-Cola or Apple? Actually, it's not really. If you really understand the business, actually it's called Gecko. This is actually basically is one of the largest insurance company, general insurance company in US. Okay, so I think they have a very significant stake in the general insurance, meaning that a lot of car, okay, are actually using Gecko as a insurance. Okay, so Warren Buffett is a very smart fellow. He actually collected a lot of premium from the insurance company and reinvest back it and compound his money. All right, so this is how the way he actually become one of the richest men in the world. All right. So basically, you can see if you buy into Berkshire Hathaway, you are buying into all these company. Okay, Dr. Peter, you can see that. Okay, including a pharmaceutical company.
Excellent.
You know what I mean? And all these company Warren Buffett invested in one I would believe they have a PE one. Meaning that all these company are making money already. Okay, and have a dividend or making money to inject into a Berkshire Hathaway. Okay, so this, when you understand, wow, this is the company you are invested in, you have a wow factor, right? Because you don't worry about this company can go under in another 10 to 20 years, unless really big thing happen. But so far, the culture, everything is fixed already. So once you invested in US company, when the company reaches kind of size, okay, you don't really have to worry already. It's because of the management will take care, and the cultures, okay, of the company will continue. Even a lot of people worry about Warren Buffett and Charlie Munger is too old already to handle it. And in fact, actually recently, shareholder meeting, Warren Buffett already appointed, okay, the CEO to take over already, if something happened to him. So if you look at this kind of culture, okay, so they will maintain years to come. Okay, so your money is still working very hard for you because you are putting in a company which they invested in those business which actually are working very hard for them. Okay, again, this is not the latest slide. Okay, because some of the like Southway, United Airlines, they have trimmed down already the stack. Okay, but I would say 80% to 90% of the stack that still remain and hold by Berkshire Hathaway.
Mike, can I put it in simplistic terms, okay?
Yep.
For easy understanding of our fellow audience. I believe that what's been shown here, been shared here on the screen of wholly owned companies and also companies that they have significant stakes in, and also to factor in the what they call the PE ratio and all that. I believe that if you actually compare this, if you were to actually humanize Berkshire Hathaway, if you were to actually see Berkshire Hathaway as an individual, as a human, this would be the work CV of Berkshire Hathaway. Can I say that?
Yeah, if you are an employee, you go for the hire, you want to go look for a job, okay? So basically, you are the CEO of the CEO of the CEO of the CEO already.
That's an excellent portfolio. I mean, who would not want to hire you, you know? So in other contexts, in other words, who would not want to be your partner?
Exactly. So basically, when you want to, you know, let's say we talk about our financial freedom, this and that, okay? So if you are invested in this company, okay, basically, I would say every year you just take about, if your stake is big, every year you just take about 2-3% of the appreciation rate to support your life is more than enough already. And you can keep compounding it because the stock is keep going up. You know what I mean? Okay, so a lot of people think that, some people ask me, you know, hey Mike, you hold it like that, how are you going to, you know, I understand that you are a trader and investor, okay? If as an investor, if I hold like this, okay, how I can actually use the money to benefit to run my my operations or to sustain my current lifestyle. Okay, if you really hold this company 10 years ago, okay, now we try to look at the chart. We're not talking about long time ago, okay? We about, okay, maybe about, you look at it about 20 years ago or 10 years ago, okay? I'm not talking about, again, this company have class A and class B stock. We are not talking about class A stock because it's unlikely for people to own it one. Even me, it's too expensive, okay? But for class B stock, I believe you can actually start with one share. If you don't have enough money, you actually can, I mean, slowly saving, and until you have $300 and you can start to buy one share. Okay, so if you buy every month one share, you can see your company grow that 20 years ago from $35, okay, to current scenario. Assume there's no split here, okay, to $20 to $292. Okay, so you just imagine every month you just buy one share, okay, and then the money actually is work very hard for you. So if you have, I mean, you have other income source, okay, you can let it run and to build your wealth like that. Okay, if let's say you are purely investor but you are a big time investor, you actually can just withdraw a bit from your investment to sustain your lifestyle, you know. Okay, so this is how, it's another way we are talking about why you can using US stock as a financial freedom for you. Okay, but again, it takes time. Okay, it's not 1 or 2 days thing. It's not about 1 or 2 years thing. Okay, so I want to let you know this thing. Have to, at least you have to want to see the impact at least about 3 to 5 years time, or the longer the better. Okay, especially for this type of company. Okay.
I mean, let's put it this way. We don't rush good things, all right? I mean, here in the Malaysian context, in the Malaysian scenario, okay, excuse me, I believe that if not everyone, then probably over 90 or 95% of the population would know the name Genting, all right? Now, I'm not talking about Bursa Malaysia or stocks and all that. I'm just illustrating here. I believe that majority of people would know that the owner of Genting would be the late Mr. Lim Gotong. Okay, so he did not amass his fortune. He did not build his portfolio overnight. He built his portfolio over a lifetime. Yeah. Basically, from what I understand, I mean, he's been working since his early childhood days, from the age of what, 13 or 14 years old, or even, I mean, that gentleman never retired, you know. I mean, he's got all the money that he needs and all that, but then again, he chose to not retire. He chose to stay active in his company, in society, community, and all that. But what I'm trying to say here is that good things takes time to grow. Okay. Now, in the case of Genting, you know, it took him his whole lifetime. All right. But the bright side of what we are doing over here is this. Okay. You do not have to take a whole lifetime to grow your portfolio to reach your financial freedom. Okay. So as always, financial independence, financial freedom is different for every person. Some people can achieve it with, some people, I mean, you know, for them, financial freedom, financial independence is basically 100K. For some people, it's $500,000. For some people, it's $1 million. For some people, it's 10. For some people, it's 100. So depending on where you are, okay, depending on your capital that you invest in regularly on a regular basis, I'm not talking about a one lump sum or what. So you basically can gauge what is the time frame for your financial freedom, and it definitely doesn't take you a lifetime to actually get there. So this is basically the bright side of things. So when over here, when we say that it takes time, okay, I understand for those of you out there who really want a shift and a change of your lifestyle, you want it to change like, you know, just like that. But this is life. This is not another Marvel movie, okay? And for your information, Marvel movie is actually inspired by real life, alright? Now that is for another video, not for this video, okay? But for your life to actually change, okay, this is where it really changes, alright? A 1 year change, a 3 year change, a 5 year change, okay? And when you look back, when you actually document your life, or you actually, I'm not too sure if you guys nowadays still keep a journal or a diary and all that, you know? You can actually start writing your diary or journal now and then look back at it a year later, 3 years, you know, that kind of thing. And you will see, yes, with the financial market, I changed my life. Correct, Mike?
I totally agree what you say. Okay. Again, okay. If you really you know, want to start to invest securely and for the long term, okay, value investing, okay. As I say, you can keep buying this stock if you don't have a big amount to start with, okay. But again, you have to be very, very patient to look at the things, okay, in a long term basis. All right. Okay, let me show you why you have to be very patient in the last 20 years before the Class B stock, okay, grow from $27 to $292. All right, okay, it's very simple. Okay, guys, you guys actually can using Google, Yahoo Finance, Market Watch, you name it, plenty of it, CNBC, you know, okay, to see this, how this stock growth, okay. So basically, if you look at in 5 years time, 5 years ago you invested with $141. Today the stock is not bad, almost double. Okay, but along this way, it did go up straight line or not, Peter?
Definitely not.
Exactly. Okay. because the market sentiment every day is changing, because I'm a trader also, okay, as well as investor, okay. So I know that, okay, you are actually, when you buy a stock, okay, you are actually, if you want to play a long-term game, you are like playing a chess. You must maintain your king, okay. When you play a chess, if your king is die, you are checkmate already in long term. All right, okay. So basically I would say the king actually is basically like Warren Buffett stock, okay, for a long-term value investor, which we always say in Wall Street. There's a very funny terms, when they want to so-called like compete each other, the trader, okay. So who actually is the last man stand? The last man stand actually is not in Wall Street. The last man stand actually is in Omaha, if you can see. All right, okay, the last man stand actually, the HQ is in Omaha, Nebraska, okay. So those who actually understand where is Omaha and Nebraska, it's actually a very small town. When I was in Chicago, I want to go there. Even Chicago is very nearby there already. Also take about have to transit I think a flight, or you have to drive at least about 10 to 20 hours, if you're not mistaken. Okay, it's very, very long actually. But that is actually Chicago, which actually the biggest town where you can actually landed there, and transit to the smaller town. Okay. So why actually Warren Buffett actually from Wall Street shift back to Omaha is because he don't like to listen the noise. Okay, because in Wall Street every day is a noise one. Okay, the market noise every day is a noise one. So I give you an example. Okay, in this 5 years time, okay, if you are timing, you try to time the market, you go in on 21st of February 2020 at 229. Okay. So the moment you're going in, the stock go down to 170 because certain thing happen, maybe I think during this period of time is coronavirus. Okay. So in fact, actually, if your timing is not so good, okay, you're going around this period before the whole thing go down. You're supposed to be buy it one, but a lot of people are scared to buy it. Okay. So you sell it. Let's say, for example, you panic. You say, ayo, I heard somebody say Berkshire Hathaway is so good. Why? This has happened to actually not only Berkshire Hathaway, it happened to Starbucks, it happened to Apple. The whole market go down, slam down is because of the fear. Okay, because of the Wall Street. Okay, because of the Wall Street, people are selling like crazy. Okay, they're not looking at the business, because Wall Street people they make money through trading. Okay, so when the fear is coming, okay, they're worried, they will keep selling. Okay, so all people are start fear and start to sell. Okay, you just imagine, okay, you are thinking of, whoa, I heard somebody say Berkshire Hathaway is very good, Starbucks is very good, I'm losing money now, Okay, so in a January you're buying in, okay, and in March, right, the worst case, you, because of fear, noise, all these things, okay, maybe you cut loss, you say, I don't think I want to hold it anymore, you see or not? So you cut loss. Well, I just let you know, okay, it actually take less than 6 months the thing come back, and now it's going up because people start to discover the value already. You know what I mean? So basically, if you are an investment or look at investment side, why I'm saying that, okay, I more and more like Berkshire Hathaway is because in my investment portfolio, okay, it's because this stock, you don't need to worry about the market noise one. One day it will go up. When you invest in blue chip, it is like that. And normally this thing will turn around very, very fast. I would say fast here is maybe like 6 months, 9 months it will come. But you think that 6 months or 9 months also you cannot stand, I just say, maybe stock market is not for you. Okay, you can go to casino, okay?
Which is highly not recommended.
It's highly not recommended. Exactly. You see, or you try to become a super trader, this and that, I would say very, very tough, because like I say already, okay, most of you don't have time. If you guys have time, you have money, today you won't look at this already. Or maybe you look at this just for the entertainment already. Okay. So this is very important when you want to invest. Okay, you have to look at the long term and accumulate your wealth. Okay, so if you started invested 10 years ago, just like, you know, okay, you really this is really a 5 years one. Okay, so we will look at it 5 years now. Okay, 5 years ago you keep investing, just buying this, okay, good stock. This is, I will call it not only good, I will call it the best stock in the market. Okay, a lot of people will say, oh Mike, you know that I buy some growth stock, wow, from $10 now become $100, this and that, yeah, plenty of it. Okay, but if you look at the fundamental point of view, okay, other stock are as solid as this or not? This is a proven, history proven, solid. I myself also, I have portfolio in my growth stock, in my super growth stock in my portfolio. Okay, which actually I entered it quite early, you know. Okay, so basically, but the price fluctuate is very, very big. It's not like Berkshire, where you look at it, okay, the price from 229 go down to around 170. You think this is very big already? Let me tell you, okay, some of the stock, okay, growth stock, I take it one of the example growth stock, okay. If you cannot see Berkshire Hathaway fluctuate, okay, when you look at this stock is called NEO, okay, yeah, you are very excited in this period of time, definitely, because the same thing happened to me. I'm actually going in NEO around $25, and I ride all the way, you know, to here. Okay, but you can see that from the top $61, and it can go down almost 50% if you compare to Berkshire blue chips stock, you know. Okay, so why? Because this stock definitely promise a very good futures. Okay, however, this stock, if you look at the PE ratio, I don't think they have a PE ratio yet. Okay, you know what I mean? Okay, the risk is there, so you actually can have a small portion of this portfolio, okay, inside your investment. Okay, so I'm actually reduce the stack in this stock, okay, and put it into a Berkshire Hathaway. Okay, so basically because of course that portfolio basically is used for investment. Okay, so basically if this stock go down again, I may buy it. Okay, because it's good to buy something that is cheaper rather than you buy actually is more expensive, more expensive. But in Berkshire Hathaway, it's different. Okay, you know the business, no matter how, will grow steady and surely, slowly and steady. Okay, so that is the reason why I say if you are new and you are very scared of look at the stock price go down this and that one, this stock promise you this stock will give you, not promise, I would say will give you, because this stock has been proven since 1970. Oh, I haven't born yet, Peter haven't born yet, until now. Okay, when you look at the maximum, okay, because class B only they started in 1995, when a lot of people cannot afford to buy class A, and Warren Buffett have no choice to come out of class B stock for a normal retail investor to buy in.
Mike, and since you mentioned the year 1970 and all that, okay, for those of you, okay, who will be most likely will be calling more in the more senior group, okay, more senior age group. For those of you who actually have a chance to invest into Berkshire Hathaway, that would be Class A since the 1970s, okay? Or if any of you outside there who are watching this video now, okay, you actually know anyone who has invested in Berkshire Class A 70 and in the 1970s, take the opportunity to talk with them, okay? When you talk with them, you will definitely have zero doubt about Berkshire Hathaway, all right? Now, basically, I mean, a lot of us here in this part of the world, okay, we have a very strong tendency to do this. Aiya, wasted lah. Should have gone in, should have went in. Didn't do anything, only watch. Aiya, now the thing goes sky high already. What to do now? Can chase some more? How? You ask this sifu, you ask that guru, you ask that teacher, you ask that coach, you ask everybody. If you have Anthony Robbins' phone, I believe that you will give him a call to the US and you will ask him also, okay? But let's put it this way. The best time to plant a tree, okay, for some of you it can be a durian tree, for some of you it can be a coconut tree, for some of you it can be palm oil, it doesn't matter what tree, okay? The best time to plant a tree was 20 years ago, okay? Second best time is when? It's right now. So if you don't plant your tree now, meaning to say that if you don't pick your company now, you don't pick your stock now, 20 years later, you are going to go into this symptom of Ayah. Do you want to Ayah for life? Not me, definitely not me. All right. And after this, you guys can actually make a cross comparison. For those of you who have, I don't know, nowadays people have 2 monitor screens, 3, 4, even 5 monitor screens. You can actually put the graph of Berkshire Hathaway Class A on one screen and you put Class B on another screen. All right. You can actually make a comparison of it from year to year. Okay, I'm not talking about the exact year. I'm talking from the year that it started for Class A and Class B. It's not the same, but you can see a very significant similarity here. All right. Now, if you can see Class A as it is today, okay. Now, I'm not giving you a prediction. Okay, I'm not a soothsayer. All right. I'm not somebody who tells you the future. Okay, but if you can see that pattern, then you would understand why Class B is something. This is in my opinion, all right? I'm not talking this for anybody else. This is just in my opinion. This would be something that everybody needs to take a look into, okay? And people like to ask, you know, what is the best stocks? What is the best ETF? You know, what is the best index? The best is what works for you, okay? But what we are showing you here is, this is what we consider to be, and if there was ever such thing called an everlasting company, this is it. This is what we consider to be in the category of an everlasting company, okay? Now, an everlasting company, yes, they have, it doesn't go up in a straight line, okay? There will be dips, okay? There will be spikes, okay? There will be sideways, okay? That will be all of it, okay? But from the point of where it started to the point where it is today, that is how you see that company, okay? If you ride with it, you're gonna have a significant change in your life.
Yep. Yeah, totally right. Okay, Dr. Peter. All right. Okay. So it's not too late for you to buy Berkshire Hathaway. Okay. I just bought it actually a years ago, and I keep accumulating it. Okay. Okay. Because of this is actually in my investment portfolio. Okay, I would call it a long-term investment portfolio. Okay, a last man standing portfolio. Okay, which actually I won't sell it. Okay, I believe this company will survive another 20 years. Even Warren Buffett is normal here. Charlie Munger is normal here. Okay, because I understand the US cultures or type of a business. Okay, they are not like Asian type. When the founder is gone, okay, the business is not sustainable here. Okay, but US company, when the culture is there, you know, you will actually keep continuing. Maybe even do even better, right? Something like Coca-Cola. Okay, you look at it. Okay, long ago already, it's still there. All right. Okay, so this is why if you want to buy in, okay, but you have to compare all the the revenue, everything. You can do it yourself, and by take a look what is the profit, the current profit, this and that. Okay, but as I told you already, okay, this company, if technically you look at the revenue, okay, in 2020 is 245 billions. Okay, that is actually equivalent to the GDP of Malaysia, more than that. Okay, and more than a country GDP. Okay, this type of revenue actually is much higher than a lot of country GDP. You are actually indirectly you are buying something that is better than a lot of countries business, whole country business. Okay, so this is a humongous. Okay, and again they are making profit, and then you really want to look at the financial statement. Okay, you know how much cash they are in hand. Okay, because everybody know cash is a lifeblood in a business. Okay, you look at the earning per share, how much is it? Okay, and if you try to look at the financial part, you can go to this part. Okay, and you look at the revenues. Okay, okay, now actually it's increasing. Just now we are talking about 200. Now actually it's almost like 365 billion, Peter, meaning that one day they have a revenue of 1 billion. You think this company will go wrong anytime in 5 to 10 years time with the subsidiary that we have discussed?
You know
And
what?
they are actually they own Apple actually. Okay, so the net income is almost like 100 billion. Okay, you know what I mean? Okay, so basically this company, if you want to sleep well, don't want for your long-term portfolio, okay, because I don't want to talk about swing trading. I don't want to talking about what you call it, day trading. I don't want to talk about momentum trading. Okay, all these things, because I myself as a trader. But even as a trader, I respect this company. I respect Warren Buffett a lot. I believe this company. When I invested in, I no need to look at it. This portfolio, I have 6 portfolio overall. Okay, 6 to 8 if I'm mistaken. Okay, so this portfolio I just put aside. I seldom trade. Okay, I seldom memang even I think 1 month, sometimes even don't even one trade. Sometimes 2-3 months only one trade. You know what I mean? Okay, because this is the portfolio actually basically keep growing. Okay, of course there will be up and down in the short term period, like 1 week, 1 month. Okay, but in the 1 year period, okay, I almost have about, it's not even 1 week, 1 year yet. Okay, it's about 9 months. My return is almost about 100%. Okay, and I keep actually one of my long-term portfolio. Now actually Berkshire will actually become my biggest holding in my investment portfolio, which actually is about 20 to 30%. Okay, and followed by Apple. Okay, because all this long-term, and I have some growth stock there, but it's very small portion only, because I know those figures will fluctuate down and up, not constant as like in a Berkshire Hathaway. Okay, so again, if you are looking for long-term, last man standing, be a king. Okay, and want to build your wealth in 10 to 20 years from now. I have nothing to tell you already. You look at these figures, you know already yourself. One day the company actually is making 1 billion. Okay, you know, one day is 1 billion. Okay, and their net profit is about 100 billion. Okay, so Peter, I think I don't need to explain more about this.
I think we have basically already covered valuation and also future growth of Berkshire Hathaway. And as always, people would like to ask, what is the risk? Okay, I mean, let's put it simple terms. The only risk that I see over here, okay, is only one. Is what is your extent of your patience and what is your time frame? That is the only risk that I can see for anyone that goes in with Berkshire Hathaway. So this is a company that literally, when you enter into a position or 10 or 100 or maybe even 1,000, positions here, literally you sleep well at night. You don't have to worry about it. Okay, if you have a day job, just do your job. Okay, and whatever that you have invested here in Berkshire Hathaway, it will grow on its own without you having to intervene. Okay, so that is the beauty of it. I don't see any other risk factors with Berkshire Hathaway. Do you think there's any other risk with Berkshire Hathaway, Mike?
A lot of people, a bit skeptical. They were saying that, okay, Warren Buffett is already about 89 years old. Charlie Munger is about 93 years old. So basically, of course, Warren Buffett, to be very frank, I would say a lot of investment in Berkshire Hathaway, he already assigned to his capable management team already. You can study your own. Okay, so the way he chose the management team, I believe he know. Okay, if you really look at how Warren Buffett choose people, he say you need 3 criteria. Okay, number 1, you have to be very energetic. Okay, energetic meaning that you're full of energy. All right. Number 2, you have to be extremely smart. Okay, meaning that you are smart. Okay, you know what to do and that. And number 3, he say the guy have to be a very honest guy. And he said something very good. He said without number 3, number 1 and number 2 is useless. You know what I mean? Okay, so this is actually his principle to choose his successor, his management. Okay, so I believe, okay, those successors that he choose will carry his principle of investing. Okay, and also I also believe that, okay, in a way the company that we're buying, you have to know that Berkshire Hathaway actually is a conglomerate. Okay, so those principles already laid down in Berkshire Hathaway culture, they will use that principle to acquire the substantial stake in other companies also. Okay, so even Warren Buffett is normal here. Okay, I believe he still at least have a 10 years life span. Okay, so even if it's normal here already, I believe that, okay, Berkshire Hathaway will still continue growing, just like what Coca-Cola did. Okay, because this is a principle that he already laid down in the company. And in US, okay, when things has already laid down in the company, you can't change it because shareholders are the biggest say. Okay, and the management, of course, definitely those are chosen by Warren Buffett one. Well, okay, follow his principle of running the company. Okay, so this is why, like what Peter said, is true. When you buy this company, you don't need to look at the chart or whatever. You just continue buying it. Okay, when you have extra money. Okay, and 5 years from now, you just look at it, your account. Don't look at the 5 days. Don't look at the 5 months. Okay, or you can access it maybe a 1 year, 2 years. Because we never know the price. Maybe tomorrow will go down or whatever. This is very obvious one in trading. I'm a trader. I understand that. Okay, but that is on trading, which a lot of people don't have time, a lot of skill also to do that. But for investing, it's simple, but not easy. And because today we are actually talking about Berkshire Hathaway again, I'd like to take another scenario. What actually Warren Buffett replied when the richest man in the world asked him, Jeff Bezos asked him, it seems like your way of investing is too simple, but why everybody cannot follow it? Peter, I believe you know the answer, right? Okay, Warren Buffett actually sometimes is a very sarcastic old fella, old uncle we call it. Okay,
with a good humor.
He say that actually, yeah. He say what? He say actually, no one actually is keen to become rich in the long-term basis. Everybody want to become rich in 1 or 2 year time, or in 1 or 2 days time, or in 1 or 2 months time. Which I totally agree. This happened to me in my early days of investing and trading.
Thanks to fast food.
Yes, exactly. Okay, but as times go by, I do understand that, okay, investing, okay, is a marathon. Okay, it's the marathon. Okay, I'm not talking about trading here, but as a trader, okay, it's actually a sprinter. Okay, so you want to learn how to trade and investing at the same time, it takes very, very long. It's not easy because I study psychology. I know that. Okay, because why? Because our mindset is more like a Dr. Jekyll and Mr. Hyde when it comes to investing and trading. You see or not? So a lot of people say, if you really want that, I can share with you. Okay, you actually can be our MTRADEGO user. Okay, as times go by, follow in our group. I can share with you how you can become a trader, how to become an investor. But today, I just want to focus about investing because I believe that a lot of people don't have times, okay, a lot to trade, okay. A lot of people I mean, they want to look for another source of income 5 years, 10 years, maybe a retirement fund or anything to grow their wealth. So if you really want to do that, this is the best stock. Okay, don't say it's very expensive. Again, I tell you already, this is the cheapest stock in terms of value. Don't buy something that is show you the tagline is very, very cheap, but you don't get any value out of it. Okay, you understand what I mean, right? Okay, we already do the illustration in the very early. Okay, you buy a broken car 10 years ago, okay, with maybe about 5,000 ringgit, 10,000 ringgit. You take time to fix it, okay, give you a lot of headache, this and that. Okay, so is that the value you get? You don't get value at all. You know, but you buy a new car. I'm not mentioning about car because car is a depreciation. I just want to do a comparison between value investing. What is called value investing? What actually give you more value? You know, okay. So another thing, also the same thing when you go into the supermarket there, okay, you want to buy something that is you think that is very expensive, very good, to feel good after you're using it. Okay, for example, like branded goods. Okay, but it's the same thing. Okay, you buy another thing which actually gives you more value. Okay, so again, when you value a stock, don't look at the price tag unless you are a trader, which you come in and come out and come in very fast. In 1 day, 1 week, 1 month, or even 3 to 6 months. If you are not that kind of category person, okay, you are thinking of accumulate your wealth in 3 to 5 years time, 5 to 10 years time, and you don't have time to do research this and that, and you worry this and that, okay, this is the right stock for you. This is the right stock for you. Okay, and it is very cheap because this is undervalued. Don't look at the price tag. Okay, this is what I mean here is cheap here. Okay, cheap is meaning that it's undervalued here. It's not the price tag. Okay, Doctor Peter.
So guys, if you recall, okay, Berkshire Hathaway Class A back in 1970s, 1980s, it wasn't 400,000 USD. It wasn't. Okay, back then it was only 2-digit or 1-digit stock. But that was 1970, 1980, and today, after 2020, one stock is 400k. All right. So depending on which country you are from, you can convert into your local currency, and you will know that wow, something from 2-digit value actually grew to 400,000 per stocks. All right, and basically, this is the same mother company. Okay, it's basically the biggest sibling of Class B. All right, under the same leadership. Okay, Warren Buffett. Okay, now I mean, for those of you who are concerned with change of leadership, you know, passing of the baton, some people call it passing of the baton and all that. Okay, let me give you some real life examples. Okay, I believe that most people would know Apple, okay, and a lot of you would know that currently Apple is no longer under the leadership of Steve Jobs, neither is it under the leadership of Steve Wozniak, okay, but Apple has already systemized itself, okay, and even as of today, as we speak, even under the leadership of Tim Cook, Apple is performing better than ever. You know, at the time when Jobs was passing over leadership to Tim Cook, you know, everybody was like, that could be the end of the era Apple and those kind of things. But hey, history shows who is right, okay, and who isn't. And also that is only one example. I mean, that's an example of a person who has already left us. Okay. Another example, okay, Amazon. All right. I believe by now everyone will know who Mr. Jeff Bezos is. Okay. So Jeff Bezos, in his own context, okay, in his own words, he has been working for many years already. Okay. And he also planned to semi-retire in the sense whereby he too is going to pass over the leadership of Amazon to his next chosen CEO, okay, to have more time to focus on his other projects. All right, for those of you who know, you know. For those of you who do not know, well, basically Jeff Bezos dabbles in many other futuristic endeavors, okay, and he doesn't have any worry about passing on the baton to his next CEO, okay, after managing Amazon for so many decades of his own life. All right, same thing also applies to Tesla and all that. Okay, so we are coming to an end for our session, okay, but before we actually come to an end for our session, okay, now I believe that a lot of you have gotten tremendous, fantastic value from our sharing today, okay, and also before we leave you for the day, all right, we would like to share with you why is it, okay, what is the key reason, all right, that you should be choosing MTRADEGO, okay, over the many options that you have nowadays. We're going to tell you what differentiates us from everyone else, okay. Now take note, I did not say that we are better, I did not say that we are the best, okay, but we have something special, all right, that differentiates us from everyone else, okay. Now I'm going to let Mike share that with you. What is the unique point that makes us so different, so unique, and so special from the other options that you may have out there? Mike, please.
Yeah, guys, a lot of people actually when they want to buy stocks, they will choose a platform, okay, like Dr. Peter say, we don't want to claim we are the best or this and that, but when you're using MTRADEGO, number one, okay, a lot of people will ask whether my money is safe or not. Okay, I have to let you know, okay, MTRADEGO is owned by MSR Capitals and MTRADEGO, which actually one is a fintech company, another one actually is a licensed, okay, company. Okay, so basically one thing here you need to really assure that here is your money is safe, because your money is parked with our custodian, meaning that you will actually directly, okay, put your money into our custodian, which actually is one of the biggest, okay, longest also, I say, okay, custodian and a clearing house in US. Okay, this is number one. Okay, so number two, that, okay, you actually can using our platform, okay, to buy stock easily you want, okay, just with a very simple interface, okay, and follow step by step. All right, okay, this is number two. And the most important part here is especially for the Southeast Asia client, because we are actually not targeting American clients, okay, or European clients, okay. Okay, so because our target is based in Southeast Asia, okay, meaning that you actually will get a full support from us. Okay, a lot of people will try to compare us with American broker. Okay, I just let you know, okay, most of the American broker currently they don't take Southeast Asia clients. Okay, one of the issue is because of the AMLA. Okay, because Southeast Asia, except Singapore, is considered a very high risk for them. Okay, however, okay, if you with us, we will actually give you a support, and then your money is parked in Wall Street, okay, with custodians. Okay, so basically custodians already in the business more than 20 years. Okay, so in terms of the safety side, okay, you are very, very sure that you will get 100% protections. Okay, so the last point I want to straighten here is, in MTRADEGO, we want you to make money. This is very, very important. Okay, we want you to make money. This is why we come out this series. Okay, and you actually are using a platform which actually is created by a trader and an investor, which is myself. Okay, so we know whatever things those brokers outside they do. Okay, we don't do that. Some of them, okay, it's just like CFD, this and that. Okay, we don't do that kind of so-called pinky stuff in the back end. Okay, we don't do that at all, because your order will directly route to US, executed in US, rather than go through many channels like in Singapore or Hong Kong. All right, okay, so this is very important. Secondly is the education part, just like today why we give it to you. Okay, if you are a trader, okay, we also will guide you how to trade options. Okay, so for us, education comes first, trading, investing comes second. This is a uniqueness. But for other broker, I believe maybe they try to do that also, but like I say already, okay, they are not give you a full attention or focus. Unlike in MTRADEGO, okay, we actually plan for you already, okay, step by step how to do it. Because in MTRADEGO, we don't believe you can get rich overnight one, no such thing one. Okay, so what we do is all follow the rules, okay, regulations, okay, and if you do it step by step, okay, you can see the result in 1 year time. You're willing to learn, okay, because we don't want to be like other broker is just want to earn your money. We want you to make money. At the same time, we will not consider we are the lowest commission compared to the US broker. Again, as I stress here, US broker don't give you a full support. Okay, but in Southeast Asia and in Malaysia, our commission is very competitive. Okay, and we will consider actually the lowest. Okay, so if you want to know more about the fees, okay, we actually have a comparison. You just write an email to admin, we will email to you. Okay, so again, I say, okay, MTRADEGO is uniqueness is because we emphasize education, we emphasize, okay, our clients, we want you to make money, okay, and we want you to grow with us, okay, and of course your money is safe is because your money is parked with our custodian in the US, which actually already in the business more than 20 over years, and they are listed, and in Malaysia context they are bigger than the largest bank in Malaysia. Okay, so this part you rest assured that you don't have to worry. Okay, doctor?
Alright guys, thanks for your time. Thank you for staying with us up until this point. Okay, and be sure to tune in. We have more interesting stuffs and discussions, and also pointers for you in our next coming video. Okay, now before we go off, alright, we have our links below here. Alright, just click on the link to get started to install your MTRADEGO app. You can get started today. All the instructions will be inside the app. Just follow the instructions, the guideline, and everything would be just like ABC. Okay, and for those of you who have questions, okay, we would have our email listed here below. You can write into admin@mtradego.com or support@mtradego.com. Okay, we will put the links here below our video for the simplicity of getting in touch and also communicating with us. Any questions, any inquiries, anything that you would like to ask or suggest, just write into us. Okay, but also in the meantime, just click on the link to get started, install our MTRADEGO app, have a look at it. Okay, and we would have the step-by-step and the instructional guide for you to follow, easy as ABC. All right, so then again, thanks again everyone for your time, and basically with MTRADEGO everyone can trade. We'll see you soon.
Yeah, thanks. Okay.